Welcome traders, my name is Adam Harris, Chief Market Analyst, and I'm going to run through my plan for this coming week. This is being filmed or recorded on Sunday the 20th of October for the week commencing Monday the 21st of October. So really what I'm going to be paying the most attention to out of the UK will be PMI data coming through first thing on Thursday morning, and of course midday and late afternoon on the UK side will be jobless claims, PMI data coming out of the US and new home sales. None of these really massively potentially significant other than the fact that my expectation is that there's a good chance we will see the dollar continue to weaken this week. So let's just go to the charts and I'll walk you through that. Okay, so having a look at the VIX, you can see again still maintaining relatively low volatility from a monthly perspective, which is just a great way of giving you context going back to, let's just say, all the way back to sort of 2015, 2016. We're still sitting in those low areas. This is COVID, big spike over there. This is Russia's invasion of Ukraine, this period as well. Just general tensions and the market correction where we had the bear market previously during 2022. So, and inflation as well driving a lot of that. But right now, you can see the market is ticking over happily. Let's have a look at the dollar index. Okay, so a while ago, and again, the monthly is a really great way to talk through this. We are range bound for that dollar index. It has been range bound going back to November 2022, and it found some really strong support, which was interesting because at the time there was a really fair expectation it was going to break out and potentially head lower. But the general rule is that if price is in a range, it isn't out until it's out. Okay, so even if it's at the edge, you can't really predict where it's going to go until it ultimately does break out. So at this point in time, at the very least, we've got price returning back to the center. Could we see it continue to the upside? Yes, that is a possibility. However, I would argue that this big move up here on the daily just shows that it's very much overextended. This is a particularly long, particularly long sustained move without a retracement. So what am I looking for this week? I'm looking for a potential retracement down here towards 103. Possibly, if it is a really nice, decent 50% retracement, I'll be looking for price to come back down here towards the 1.0180 level. Having a look at euro against the US dollar, again, straight to the daily, might as well just highlight it here. Again, a very long sustained move without a decent retracement within there. This could be the very first retracement. So where would I be looking for? Well, it could come back up here to 1.09 and continue down. That is a possibility if it's going to continue to strengthen. In the run-up, we are approximately 2 weeks away from the US elections. First Tuesday in November, which is the 5th this year. So we're very close by. And so possibly we could see some strengthening. We could see a shallow retracement and a continuation. Alternatively, we would get a decent retracement here. And if that is the case, and we get it now, which would only take a couple of days, we would potentially see a 50% retracement up here to 1.1, back up towards these lows, these highs here, or potentially as shallow here as 1.0960, let's call it. And so that is what I'll be looking for this coming week to see if we get a bit of that retracement. As I said, if the ultimate goal would be for that dollar to just strengthen like crazy up ahead of that election, then I would expect it to just do a minor retracement and then continue down. We'll see if that's going to be the case. Again, looking here at cable, same thing here again. You can see there's a level of support. Here's resistance. Price is finding some support there at the moment. And actually from a weekly perspective, it's almost at that same level. It's at these previous highs and same level there. We've got an uptrend here, so we are retracing, and therefore a reversal here and a potential continuation to the upside is not completely outside of the realm of possibilities. Aussie dollar as well, you can see coming back, still maintaining a slightly higher low at this point in time. And so again, on that weekly, you can see we've got a series of high lows. So if we do decide to swing higher here, which hints again supporting that idea of a weaker US dollar, if we break above the highs of this last week or this week's weekly candle here, then I would expect that dollar to continue to weaken and the Aussie dollar to strengthen. Kiwi dollar looks very much more likely to do that. Here you can see we've got two very similar lows. We've got a slightly lower low. If we switch it up and go have a look at it on a 4-hour time frame, you will see we've got very clearly got bullish divergence. We've got a lower low and we've got higher lows here, hinting at the fact that price is attempting to turn around. So that is another chart that is supporting the idea that we could see a bit of a swing this week on the majors against the US dollar. Dollar Swissy also here showing some minor signs here of a potential retracement on the horizon. We have to break the low here and start to work our way back down to 0.86. If we have a look at dollar CAD, Dollar CAD also at the top of its range. So again, a bit of a bounce here could happen. On the monthly, we are starting to look more and more bullish, but we'll see if that's going to be the case. If we have a look at dollar yen, so dollar yen also here starting to slow down a bit, we could see a little bit of a retracement. So a very, very small one, if that is the case. If it's minor, it would just be 1 or 2 days or even just Monday. We would see just a correction to the 10-period moving average, but alternatively, we would get a decent 50% correction on that. All right, let's move on and have a look at some of the other markets here. Okay, so next up we have gold. Now, if you have a look at gold. So gold, I'm going to write an article on this for investing.com, but I think gold is in a bubble. So why do I say that? Well, the last time that gold was in a bubble, we got some seriously big moves. That was going back to 2011. We just had this really unsustained move and this feeling that gold would just never come back down. We are absolutely in a similar environment, so I'm going to just flat out say that gold is in a bubble. The problem with bubbles is that you don't really know when they're going to burst, but we are in one. This is absolutely ridiculous. And also what I would add is that when the bubble bursts, it's not impossible that we could see a correction as far as 2000. That is a very real possibility. And if that does happen, it's also high probability that gold might not do much after that. So very interesting to me. Doesn't mean that price won't necessarily keep going. I've been concerned about it for a while. I've been looking for retracements all the way back here, but the fact is it just continues to go. That weekly is now starting to turn a bit parabolic, but the daily looks pretty good. So here's the approach for traders is, yes, I would continue to look for buying opportunities whenever price retraces back into the moving averages. But again, I would maintain my concern about ultimately that if we do get that correction when that bubble does burst, that I would be prepared. So I'd be risking less than my usual amount, so 0.5% instead of 1%, for example. But yes, absolutely, I am of the opinion this is now hard on its way to 2,800, but it is in a bubble, and at some point I expect that bubble to burst. Let's have a look at light crude. So light crude is looking more and more bearish. If we go have a look at it here from a weekly perspective, you've just got a continuing series of lower highs, lower lows. Let me just kind of highlight that this way. So we've just got a series of lower highs coming in, price hitting, getting pushed down that pressure down towards that $63, $64 level. And at some point, I expect it to break through that and continue down. But for now, the pressure remains bearish. Okay, so that just continues to look bearish. Now, let's have a look at the global indices. So again, market's very happy. This is the S&P continues to climb. And again, it just continues to climb. Not that overextended on the weekly, just ticking over. Monthly, not ridiculously overextended. And we've got the data here. Of course, at any time, we will be due for a bit of a retracement. But for now, the market continues to just look very nice and bullish. He has a really nice break and a retest, this really nice bullish candle here. And so my expectation for now is that just any pullbacks still represent buying opportunities. The S&P as well. This looks like this is forming a very small breakout pattern here. So let's have a look at this on a lower time frame. On a 4-hour, this is forming a triangular breakout over here. So something that looks a little bit like this. And another one. Something along these lines. So this would expect or anticipate a potential breakout this week. Early, probably Monday or Tuesday. So that is looking good for a continuation to the upside. Again, it just continues to tick over. Yes, at some point I do still expect a deeper correction, but we're past September. Now we're heading off towards the election, and that is probably the next really big hurdle that the market is keeping its eyes on. NASDAQ as well here. Very nice break and a retest looking particularly bullish. So I expect this to continue to tick up. So far, based off the price action here, this looks as though it's just going to keep going, sliding its way to the upside. Russell 2000, battling a little bit here with resistance, but you can see again also a little bit of a triangular pattern forming here. So it's testing resistance here, but producing a series of high lows into that. At some point, that MACD also trending higher. I expect it to break out. We put the FTSE just pretty much going sideways. It hasn't really done that much if you go all the way back to last year as well, more than a year. Actually, I beg your pardon, that is May this year. It's pretty much just stayed very much range bound, incredibly choppy. There's no day traders, just no real value in trading the FTSE. It would be much safer to trade the US indices, but the momentum is still very much to the upside, and that monthly candle looking really good. Connecting with the 10-period moving average, the pressure is much more to the upside than anywhere else. The DAX continues to look really good, continues to trend and push high, very similar in its weekly and monthly behavior to the S&P. Let's have a look at the Nikkei. So the Nikkei is battling just with this level of resistance over here, but the pressure is still to the upside. Okay, so there's a few that are battling here with resistance, but there is more pressure to the upside than at this time. I'm not seeing any reason to be concerned. What I would be looking for that would make me concerned, for example, would be a big bearish candle that would be a move away from this consolidation closing near the lows. That would be a clue to me that that level has failed, and that would be the same with Russell 2000. We would see price would actually just come back in with this within this range. But right now, all of this looking very good. Let's have a look at Berkshire Hathaway. So Berkshire Hathaway, this is the reason all these circles are over here, is that I was highlighting how from an investment perspective, buying when price pulls back to the moving averages, this was for an article, buying when price is near proximity-wise the moving averages, that becomes a good opportunity to buy. It's a very simplistic approach, but you can see that it has pretty much 100% success rate. There's one little period here where there's a bit of a deeper correction during 2020, which is probably COVID, but then it just moved down to the 50-period moving average. But at every other point here when price, such as it almost is here, is approaching the 10-period moving average, it becomes one of the better periods to buy rather than waiting for price to move away from us. So if you think of this as a train and the moving averages as the train station, we're waiting for the train to come back to the train station. If it has already left the train station and we haven't got on it, we've just got to wait for it to come back. And it is potentially working its way back here. So something to pay attention to here. But overall, it looks really good. I could just see it ticking away as it heads to the upside there. That's Berkshire Hathaway. Nvidia's broken up through here, looks particularly good. The only thing I'm looking at now is it's back up at these previous highs. Will it double top? So, well, I'm going to leave this for now because it's too soon to tell. I would only confirm it as a double top if at this point the weekly produced a swing high. So the fact that it's up at an old high and it's just had a reaction there is not enough of a confirmation. That is not a double top. A double top is when price touches it here, and you see it create a rejection. And so you see that swing high, and then that would confirm it. We don't have that yet. If anything, price can just keep going here. So that looks all right as it is. Tesla, still within the zone. So I want to adjust this a little bit here. I want to just adjust this because the charts have changed. And so overall, it's still just not really. I had it at bullish. We can see a very strong rejection here. So it is definitely battling with that let's call it $260 level. Still battling with that. So interesting to see what's going to happen here. For now, my expectation is still that it will stay within this range. Okay. So kind of scary that if you bought shares at any point in the last 4 years or something like that, you wouldn't really be seeing any return on that. So for that. So just something to think about. Vanguard continues to tick up. This is beautiful. So this, similar to that S&P, just continues. And obviously, it's the S&P 500. But my point is in terms of the quality of the trend, it's just very stable, keeps going. Let's have a look at bonds. The 10-year T-note. I spoke about how my expectation was it was going to attempt to go into an uptrend here. It still potentially is. We've still got higher lows here. We've still got higher highs. We've got an uptrend on the monthly. I'm going to be looking to see if this becomes our swing low. So this is a potential swing low here. And if we're going to work our way back up, we will see. Eurobond, still supporting that idea. I like this really. Again, we've got a very nice bullish candle. We've still got a series of higher lows. We've got some strong resistance. So again, yes, I still maintain at this time that bonds are leaning bullish. They're just not heavily bullish, but they are definitely not bearish anymore. Bitcoin, cryptos, looking very good. From a monthly perspective, technically, this is beautiful. We had a really sort of consolidation, this being a bull flag. Prices now produced that swing low and is taking off. In addition to that, we could see here on a weekly perspective, we could see a nice little break and a retest and a continuation. This looks really good. So we'll see really how strong the resistance is at the 71,000 level here approximately. We're going to see how that is, but it is looking relatively bullish. And for now, again, this week, any pullbacks for me should represent buying opportunities. But yes, I would say Bitcoin looking really nice. Ethereum also starting to look really nice and bullish there. You can see it turning around. So you can see here on the weekly, we've got a beautiful series of lower highs, lower lows. You can see price starting to produce this wicks at the bottom at support, starting to turn around, and you're starting to produce equal highs here. So now what's going to happen is we're likely to break that key level right here and head up higher. So this week, my expectation is that cryptos will move higher. There we go. I'm going to leave you with that. Plenty to keep an eye out for, plenty of opportunities there, and I will see you in the next one. Thank you very much.